As we get going on this final Friday of the week, the US dollar is stabilized and is waiting for the next move, though the overall price action is still warning of further dollar declines. There have been some deviations with the euro and pound holding up better relative to commodity block currencies, which seem to be feeling the pressure from another development we haven't seen in a while, which is underperformance in the U.S. equities market on the week. Given all the negative sentiment towards the U.S. dollar right now, with ramped up soft dollar policy talk out of the U.S. administration only adding to the dollar declines, the question of the buck's safe haven status is a bigger one these days, with many contending the other major currencies will absorb a lot of this flow this time round if the market really starts to sell off. This could result in continued dollar weakness against the majors, with the dollar still holding up relatively well against the commodity block and emerging market currencies. Of course, this remains to be seen, and it's also possible the dollar ends up coming out on top in a risk liquidation backdrop. Some of the other variables that will bring further clarity to the matter are the state of the Fed policy normalization process and inflation in the U.S., which have both held the dollar back. If the Fed is forced to adopt a more aggressive rate hike timeline, this could make the dollar much more attractive than it currently is, even in the face of U.S. administration attempts to weaken the currency. The Fed has come out this week saying it expects inflation to start to show up this year, and later today we may get a hint of that when the U.S. jobs report comes out and the hourly earnings numbers are revealed. But the technicals are playing a big role here as well. The desk is very focused on that euro monthly chart and a falling trend line off the record high from 2008, which would have the euro intersecting with this massive trend line at around the 126.50 to 127 area. It has felt like the euro has been on a mission to get up to this trend line, and it might not be until we get this trend line tested that the dollar has a shot at even trying to mount a legitimate recovery, at least against the euro. So we think it will be worth keeping an eye on the euro and keeping an eye on that U.S. equity market as well for insight into those things that will be influencing the buck in the days and weeks ahead. We do see broad technical overextension in the currency markets right now, with the dollar oversold and risk building for a sizable recovery for the dollar. That euro 126.50 to 127 area isn't far off at all, and perhaps that's the area where the dollar finally tries to start to reassert. This would mesh well with possible reversal in the pound as well, which has exploded in 2018 through 140, but after reaching a big measured move extension around 143 the other week, and with Brexit bumps still out there, it's possible the current attempt back towards the 2018 high around 143.50 will stall out again up here to maybe even put in a double top, targeting a healthy correction eventually back down towards the 2017 high at 136.60 as we had proposed in today's technical update. Another sideshow right now is the exodus in the crypto markets, and this is yet another story to watch as far as its potential to create more uncertainty in global markets. Looking at the calendar, the U.S. jobs report is the major standout, but ahead of this, we get producer prices in the Eurozone, UK construction PMIs, a speech from ECB Kur, and more coalition talks out of Germany. That's all for now.